There are only two ways to be quite unprejudiced and impartial. One is to be completely ignorant. The other is to be completely indifferent. Bias and prejudice are attitudes to be kept in hand, not attitudes to be avoided. Charles Curtis. Now, folks, we have a great training for everyone who subscribes to our daily reviews and our once a week weekly review and forecast. Of course, you can subscribe for free at chartingwealth.com today. Beware of confirmation bias. And I use that quote in the training. So many times we try to see what we want to see and we think we can make the market move toward us. We cannot. We follow price movement. We don't listen to the news and try to get hot tips from there. Like the saying is on Wall Street, buy on the rumor, sell on the news. And again, if you're following the hot tips, you're going to get stung time after time after time. Price movement, that's all that matters. What the talking heads say don't matter. If you pay attention to what you hear there, you find over and over again that you've always heard it too. Later, it's just plain wrong. The reason they have the beautiful people and all the cool graphics and all the sound effects and all of that, the breathless reporting each and every day, is to keep you tuned in so they can have you watch ads. We stay away from that, my friends. Let's see what happened in the markets today. We see stocks are up, bonds and gold down. Let's jump into these charts. How are we looking for the week? Well, the S&P 500 continuing to move up 1.39%. We look at the weekly chart. What do we see there? Well, we see on our weekly chart, we have a green up candle. This is only 3 days into the 5-day candle. We see the price percent oscillator ticking up, derivative oscillator gaining upward momentum, green open box candle. Things can change from day to day, can't they? But what do they tend to do? They tend to move in the direction of the largest trend, which is the weekly. What do we see on the 2-day? Again, continuing to move up. This is the first day of the latest 2-day candle, reaching a higher high. The box of the candles also higher. Look at that price percent oscillator. It had been flat. It is trying to move up again. Just the first day. It's not written in stone yet. That happens at the close of the market on Thursday when that 2-day candle finishes drawing. Half-day candles we see up in the morning, further up in the afternoon. Looked like things were going to cross over going down, but bounced off of it, didn't it, friends? Well, we'll continue to watch, see what there is to see. The derivative oscillator is still negative, or has gone negative in the afternoon, even with that up movement. It's because of the crazy volatility that we saw at the end of the day on Tuesday. We'll see what happens as we continue to move along. Now, don't forget we had that 2-day recross, still moving in that direction quite successfully on the S&P 500. If you took your profits, hey man, don't sweat it. You did fine. Now, what do we see on the Qs? We see things a little greater than flat on the price percent oscillator. Derivative oscillator still losing momentum. For the week, we have a red open box candle showing a slowdown in the up movement. Oh man, I just screwed that up. I didn't mean to do that. We'll fix that when we go to the 2-day chart. But what do we see on the high? 272.84. The prior high, 274.98. So we're not reaching a higher high. Part of the reason we have that red open box candle, it means a slowdown in the up movement. We go to that, 2-day chart, and I have a chance to repair that. There we go. And we see on the 2-day chart, we have a green spinning top with a long wick on the top, meaning some more upward pressure, indecision tending up. Price percent oscillator is negative and flat on the 2-day. And see, we've just not had enough energy to cross it over. Still don't. Derivative oscillator losing downward momentum, but that price percent oscillator is flat. Go to the half-day chart. What do we see there? Up in the morning, a little higher up in the afternoon, but not enough energy to have that price percent oscillator crossover on the half-day chart either. Do see that at the end of the day, the derivative oscillator losing some downward momentum, but still negative. So still waiting to see if there's going to be a crossover going up at some point. what we call a 2-day recross on that 2-day in the same direction as the weekly, but again, seeing weakness there. Let's leave stocks, go to bonds. What do we see there? Down 0.91% for the day. When we look at the candle that we have forming, we can see that it is a red down candle. Now that pink line that you saw there, that was the 4-hour trend line. We'll talk about that, or the half day, when we get to it. We do see a long wick on the bottom, a little longer than the width of, or the length, I guess, of the red box. Little wick on top. We do have a solid red box. We see that price percent oscillator bouncing off the red signal line. Derivative oscillator losing momentum, but still positive. Today, we had that 2-day crossover, did we not? We see that trying to, again, continue. We didn't actually draw the line over there yesterday. We talked about it, and I asked how many of you at the end of the day hopped in to that 2-day recross. How many of you did? How did it do for you today? It was down. I guess the bottom that it hit was 164.99 from somewhere around the 168 mark or so. So not bad. Not sure when you got in yesterday afternoon at the close of the market, how that worked for you. But again, moving in that direction with that excuse me, that 2-day recross, just the first day on this latest 2-day candle. So we'll see how things go. Remember, 2-day recrosses aren't our favorite. When you've tracked them and you've seen that they work 90% of the time with the ETF or stock that you have been practice trading for quite a while, then by all means, use all the charts all the time, but you can sure consider jumping into that. We go to the half-day chart down in the morning, slow down on that down movement in the afternoon. Like we said, we saw substantial down movement in the morning. And that's where we are. Price percent oscillator continuing to move down. Derivative oscillator hammering down. That's where we are as far as bonds go. What about gold? Gold was up some during the day, but then tended to blow that off. We'll look at that in a minute. We see a red spinning top open box. So again, a lot of slowdown in the up movement. We have seen some up movement for the week, but not challenging the highs of last week. Price percent oscillator is kinking over, going down, still positive. It hadn't crossed over, but it is going down. And after we had all that super strong up movement in gold, we see that the derivative oscillator also has lost some of its energy. We can see on the 2-day chart how things again pushed further down on the first day of this latest candle, penetrating the weekly trend line. Again, another warning. We penetrated the 2-day first, then we penetrated the weekly. Now that candle's not ended yet. Don't have a crossover yet on the price percent oscillator. Getting awfully close. Derivative oscillator's gone negative. Go to the half-day chart. You can see some slowdown in the down movement in the morning and then continuation in the afternoon. Price percent oscillator spiking over. Derivative oscillator gaining downward momentum, finishing the day below the weekly trend line. Now that is a major warning sign. You have a 2-day crossover down confirmed. If that happens at the end of the day on Friday, not spelling things so good for gold. But again, you can expect a bit of a slowdown. Gold reaching the highest highs. I mean, beautiful. Again, just beautiful. And you've done well in gold with that crossover. Hanging on, even if you're on right now, look at how well you've done. Now again, make your decisions intelligently, practice trade this stuff, garner all of the profits you can, but remember, if you don't close the trade, you don't have a profit. So don't start thinking about what you don't have. Make your decisions based on what the charts are telling you. Now let's go to Bitcoin. Oh, that's it for our 4 big charts. We're going to go to Bitcoin, oil, and property, real estate. But for all of you who are just interested in those first four big charts, thank you so much for being with us. Hey, if you appreciate what we do, a little reciprocity is always appreciated. We have a number of costs here at the channel the texting service we have, the costs of the email service, the website, the updates, the webmasters that help us, all that. $30 is the lowest Patreon membership that we have. And with that, what do you get? You get all of our special trainings, the Bitcoin training, the short chart training. You get the monthly question and answer where we help you analyze the stocks and ETFs you're interested in practice trading, along with special training and questions answered for our members. Worth its weight in gold, my friends. Please, if you like stuff, you need to support it on the internet. Otherwise, things tend to go away. Thank you so much for all of our Patreon supporters over all this time. Now, let's jump into Bitcoin. What do we see going on? Bitcoin down for the day, 0.19%. We see a green up candle forming for the week. Price percent oscillators lost a little bit of energy. Derivative oscillator heading up. 2-day chart, we can see where things have topped out back on, I guess they topped out back on the Monday, Tuesday candle. We have a very, very small red candle that's forming so far, red open box candle, showing us some slowdown. Derivative oscillator also losing energy. And of course, we had that 4-hour half-day chart crossover going down back on last Friday morning, down on Friday afternoon, up on Monday, then down Tuesday and Wednesday. So we'll continue to just keep our eye on the prize there. Remember, you got in on that 2-day recross, so just be cognizant of what's going on with this latest 2-day candle. Hope that you're drawing your trend lines and using all those things. We're not putting them on these extra charts, but you should be. Let's move on to real estate. What do we see on that? Up 1.01%. We see things moving up. We still haven't reached the high from the week back ending the 12th of June, but the last 3 weeks, real estate's trying to move up. Price percent oscillators moving up. Derivative oscillators gaining a little momentum this week. 2-day chart. We see this latest candle, a red open box, sort of a slowdown in the up movement. Price percent oscillator still ticking up a little bit. Derivative oscillator losing upward momentum. And of course, we had that crossover going down on the half-day chart. And what we really see is more of a sideways slide than anything else. Nonetheless, up 1.01%. So again, in real estate, remember, we had that 2-day recross. So you don't want to lose everything you've gained, but again, continue to track, use your trend lines, and learn from these practice trades. If you don't practice trade and keep up with this and learn when and how to exit those positions. Getting in is easy with the weekly vertical crossover, the 2-day recross. Staying in and knowing when to get out, that's the magic. Let's move on to oil. Oil up for the day, 2.48%. That's a pretty good up move, isn't it? As we see oil again slowly pulling away from the red signal line, derivative oscillator still losing momentum. It peaked all the way back recently on the week ending the 10th of July. So again, but the most important thing is that price percent oscillator is continuing to distance itself from the red signal line on the 2-day chart. A little greater than flat. That is the price percent oscillator, derivative oscillator gaining upward momentum. We see the first day of this latest 2-day candle trying to move up. Still hasn't challenged the height it reached back last Wednesday, but we'll continue to watch. Half-day chart. Things had been devolving, then moving up a little bit. We saw things down in the afternoon on Tuesday, but up in the morning on Wednesday and the afternoon. So again, we'll just continue to watch oil, see what it's going to show us. Remember, we had that weekly vertical crossover back on the week ending. It was a short week before the 4th of July, the 2nd of July. That was a Thursday. So again, oil's tracking along quite nicely. Okay, little extra. Silver, barely up, 0.39% for the day. Did reach a higher high this week, but with that huge down day yesterday, that was on Tuesday, you see where the price percent oscillators lost some of its energy, as has the derivative oscillator 2-day chart. We see a red down candle forming, even though it was an up day. This is the Heikin Ashi candlestick, shows us, again, what does Heikin Ashi mean? Average pace. And we see that slowing. We see the price percent oscillator heading down, derivative oscillators going negative. And of course, 2 days on our Heikin Ashi candlesticks of down movement, price percent oscillator also heading down, and the derivative oscillator. So again, if you're in silver, just be careful. You've done really well if you got in with that weekly vertical crossover. That 2-day recross has also treated you well. Keep your eye on things, though, on silver. Again, use your trend lines, pay attention, learn, experiment, make this work. God bless, my friends. All the best from the whole team at Charting Wealth World Headquarters.